Next up on the keynote platform is Matthew Piepenburg, a partner at Greyerz Gold. And Matthew is with us for a bit of bonus material, or pre-bonus material. Matthew, thank you for joining us on the live stream.
It's great to be here. Great to see you again.
Let's start with an easy question. What or who is Greyerz Gold? Greyerz Gold.
Well, it's based on the name of our founder, Egon von Greyerz, who's kind of a legend and an icon in the gold space, very early in understanding the larger currency and banking and systemic and geopolitical risks decades ago, and the slow, real, inevitable demise due to unsustainable debt in fiat currencies. And it was a very, very conservative model, very simple message that we're all about wealth preservation, very simple offering, great servicing, but we store physical allocated gold and silver in a Swiss vault in a good jurisdiction, and we can provide liquidity for that in any currency. And in the meantime, it's not commingled, it's fully segregated, allocated gold for higher net worth clients, higher minimums, but fantastic liquidity, fantastic insurance, fantastic storage. Very simple model. Gold as a wealth preservation asset. No speculation, no hypothecation, no trickery.
Excellent. Now, you're going to be the keynote speaker in just a few minutes' time. You're speaking on gold ownership, obviously. What are some of the message you're going to share with the audience?
Yeah, I think it's really important. You know, I use military analogies all the time, and from the Civil War to the Great War, good generals always feint a direction one way and attack another. And I think there's a lot of feinting going on in the headlines about war, about interest rates, about obviously important things, conflicts in Iran, massive IPOs, earnings, tech mania, gold price volatility. All of this is certainly getting the attention. That's the feint. The real move that no one really fully, I think, wants to see and wants us to see, certainly if I were a central banker or a politician, is that there's really a sea change happening right now with precious metals and gold. And by that I mean, look, gold is a commodity. Gold is a precious metal. Gold can be compared to the DXY or to other hard assets or other commodities or to the S&P. In other words, it's always considered just an asset allocation. What I think is really being ignored, and this isn't just coming from the gold camp, it's coming from the rates camp, it's coming from the credit camp, it's coming from the currency camp, is that if you look past the headlines and look at the real direction of the general's move, gold is the new collateral. It doesn't mean the dollar is over, it doesn't mean the US Treasury is over, but when you get past the fact that central banks now hold more gold than US Treasuries, and you look at the stacking of central bank gold, and you look at the deliberate fire sale this January in gold so that more banks and sovereign wealth funds and nations could acquire the gold, they're loading up their ammunition in gold because they see the direction of the battlefield. And what that means is gold is going to be more and more the trusted collateral for international transactions and trade. Doesn't mean a gold-backed yuan, ruble, or dollar. It just means gold is now more trusted than sovereign IOUs in general, in the US Treasury in particular. And there's all kinds of evidence of that. Meanwhile, China and Hong Kong are making a deal to have a better clearing settlement system that becomes live at the end of this month. You're going to see new price discovery with less paper influence as we had in New York and London. We're going to see more physical back price discovery in Hong Kong and Shanghai. And that's a longer term way of confirming that gold is well past just being another asset class. It is becoming more trusted globally, not just in the BRICS. Even the US wants a gold-backed treasury maybe. The fact that they're even talking about that, whether it happens or not, is irrelevant. What we're seeing, what no one wants to really talk about, is this is a sea change. Gold is more than just another asset. It is part of a new way of trusting systemic money in a world gone wrong in debt.
Okay, a number of the keynote speakers here at the event have spoken about this misdirection, to use that phrase. We were obviously at an investor event with retail people. Central banks seem to, according to the thesis, they want to buy it up and stock up on it before normal people do, before normal people perhaps realize they need to do.
Right.
With finite gold production, that talks of increasing scarcity for physical gold, and perhaps even increasing difficulty for normal people like you and I being actually able to buy it.
This is classic. You're absolutely right. The plankton is always the one sacrificed for the whales. They are pushing the price down. They did that in January. They did that in December. They did these margin hikes in New York and the CME so that they could get out of a short squeeze for the banks and in the meantime acquire more gold, which they've been doing. We know that. To your point, the whales are collecting on a fire sale and retail is diverted and distracted in, I don't know, SpaceX at 100 times revenue. But what is really important is your point, there's 8 billion ounces of above ground gold in the world. 7 billion of that is in the hands of the big whales, the central banks, the big institutions, the too big to fail banks, some big sovereign wealth funds. That leaves about 500 million to a billion ounces freely traded in the mortal world of us simple people. So it doesn't take a huge amount of uptick in demand in the freely traded space for that gold price to go higher, because there's just a very specific stock to flow. It is a finite supply, unlike a U.S. Treasury. So to your point, there's going to be less and less supply of a more and more demanded asset as we get further. And of course, the central banks have seen this years ahead. They've been stacking years ahead, especially in the East. And the U.S. figured this out later. They've been dumping the price on the COMEX to buy it now. But you're right, the retail investors are the last to get the memo. They've been told for years that it's a pawn shop pet rock asset. Ironically, if it's such a pawn shop pet rock asset, why are all the big players stacking up on it right now? But they don't want the average Joe to get this. It's just nothing new under the sun.
Absolutely. So it sounds like that concentration ratios of central bank ownership of gold, that's only going to increase, and the share left for everybody else, that's going to diminish.
Yep, it's nothing new under the sun.
Okay, so you've spoken elsewhere about a sort of global monetary reset. What will that look like, and how will we notice it?
Yeah, well, it's a very good point. I mean, there's only a few options left. The U.S. the U.S. is the home of the world reserve currency. It's in debt over its skis. It's completely unsustainable and unpayable. So they have to debase the currency. That's the first thing. They got to debase. Then they have to revalue gold at some point, well above $42.21 a certificate. They can revalue at market, or they can revalue higher, but there'll be certainly a debasement of the dollar to continue. There'll be a revaluation, and then there'll be what I call a reset, which is just trying to create, there's all kinds of ways of doing a reset, but stablecoin is part of this. They want to create a new type of dollar, which is just an e-dollar that forces issuers to buy U.S. Treasuries. It's a desperate move. Right now, the stablecoin market's about 320 million market cap. They say by 2028 it could be 2 trillion, and there would be a lot of stablecoins out there. Those are indirect synthetic demand for U.S. Treasuries, which are otherwise unloved and unwanted. But that alone, stablecoins and revaluing gold if they do it, or debasing the dollar, is not enough to make the U.S. Treasury powerful or the dollar trusted. An e-dollar is still just a debased dollar. It's just an electronic version. It's also programmable, trackable, and takeable. So the biggest sucker is the end user. But very soon, whether you're at DoorDash or MasterCard, Visa, or Blackstone, you won't have a choice but to have an e-dollar.
Okay.
So that's centralization.
Stablecoin does seem to be very much the build it and they will come, which is in some ways very, very American.
Yeah.
In a recent interview, you said the market is absolutely insane and that the bond market is calling BS on sovereign debt. You said China is fighting a financial war without firing a shot, and gold is exposing the weakness of paper currencies. Matthew, what do you really think about this?
You just summed it all up perfectly. No, it's really true. I mean, by every metric, as a risk asset, former risk asset person, I can't help but look at the price to book, price to forward earnings, price to sales, and the dividend yields. It's a classically overvalued, historically overvalued market. The bond market is screaming distrust. We're seeing decade highs in sovereign yields across from the gilt to the JGB to the U.S. Treasury to the Bund. And that rising yield is just the way of the bond market saying, we really don't trust these bonds. We don't trust these IOUs. So the rising rates are terrifying to broke nations. And of course, China's playing a currency war with the U.S. This war, whatever you want to call this conflict, in Iran is about the petrodollar and the fear of that petrodollar getting out of control, and Iran selling oil outside of that dollar to China. China is all about a non-dollar oil solution. It will get it no matter what. We can't invade China. So it's all tied together, and China has been building ports and harbors and infrastructure and stacking gold while we've been blowing up ports, harbors, and playing with the interest rates. Again, I'm not pro-China here, but you got to give respect to your adversary. Financially, this is a financial proxy war in Iran with China, just like Ukraine is a financial proxy war between the West and Russia on the backs of Ukraine. I think that's not an anti-American thing, it's an economic thing. When I was a kid in Germany, we had to read Clausewitz. He always said war is an extension of politics by another means, but politics is an extension of economics. It's all about the money. And to me, this is just business as usual. The more things change, the more they stay the same.
Absolutely. Now you're being called to the stage to give your keynote, so we're going to have to draw a line under our conversation. Matthew Piepenburg, thank you very much for joining me today.
My pleasure. Thank you.